Well, hello and welcome. And in this video, we're going to take a closer look at the quantum trading VWAP, how it works, the various options that come as standard, and finally some ways to use these tools either as a day trader or a longer-term investor. The version of the indicator we have developed is in fact 5 indicators in one, based primarily on the fundamental concepts of the VWAP itself, and these are as follows: the VWAP, the MVWAP, the AVWAP, the TWAP, and the Interday VWAP. All are variants of the VWAP principles except the TWAP, which I will explain shortly. But for now, let's start with the acronym VWAP, which, as a reminder, stands for Volume Weighted Average Price. In order to explain how this is derived, let's take a simple example which will clarify this for you. I've chosen some simple numbers here and based on the first 5 minutes of a session with the following price and volume data. 1 minute, price $50, volume 5.3 million. 2 minutes, price $50.10, volume 6.5 million. 3 minutes, price $50.25 and a volume of 14 million. 4 minutes, the price is $49.80 and the volume is 16.9 million. And finally, in the 5th minute, the price is $49.25 and the volume is 24 million. We multiply the price by the volume and total this, which gives us 3,317 spot 77, and then divide this by the total of the volume, which is 66.7 million, and the result is $49.74, which is our weighted average price for this period. As a side note, it's interesting to compare this with the simple moving average of price, which in this case is $49.88. So the question is why? And the answer is because greater volume was executed at the lower prices, pulling the average price down as a result. So in simple terms, that's how the VWAP is calculated, which forms the basis for all the others, well, almost all the others. So the question is, why did we incorporate all these variants in the one indicator? And the short answer is because they are all popular. And as always, we like to over-deliver at Quantum. So we decided that this just made sense to offer all 5 variants in the one indicator, allowing our customers to choose their own favorites from the pack. In order to provide some insights and guidance, I thought it would be helpful to explain each of the 5, how and why they differ, and therefore how you might use them, either individually or in combination. So let's get started. First up, let's begin with the VWAP, which is the foundation stone of the others. And as always at quantum trading, we like to add a little extra to all our indicators. And the extra here is the addition of an upper and lower band to the indicator. These are defined as one standard deviation. And as you will see, this creates an envelope around the center line, which is the VWAP itself, and as such gives us defined regions on which to judge the price action and its departure from the VWAP. These can, of course, be switched on and off, but Anna and I believe these are extremely helpful when combined with volume price analysis to give a sense of range and hence potential reversal points as a result. The VWAP indicator resets itself daily, so when you start a new trading session, the indicator starts its calculation anew each day. It works in all time frames below the daily, and as I mentioned in the introductory video, it's important to note whether the VWAP is moving sideways, trending higher, or trending lower, as this will help to confirm whether the bulls or the bears are in control. So the inclination of the VWAP is all important. Next, we come to the thorny question of when or where to enter or exit a position. Let's start with the issue of getting into a position and how not to do it. In our view, it's folly to take the simplistic approach, which most traders do when using this indicator, and that's to sell when the price moves below and buy when it moves above the VWAP. If you adopt this approach, you will be cut to ribbons in any congestion, so don't even think of using this in any time frame. The correct approach is as follows. When looking to buy, wait for the price to move below the VWAP, so the stock is now potentially undervalued, and then wait for a reversal based on volume price analysis to confirm. Then, and only then, consider buying. When looking to sell, wait for the price to move above the VWAP, so the stock is now potentially overvalued, and then wait for a reversal based on volume price analysis to confirm. Then, and only then, consider selling. I cannot stress this too strongly, so please take this advice on board, as it will save you a huge amount of grief. And as always, we use the indicator across multiple timeframes to give us that all-important three-dimensional view of trend development from congestion or of pause points and reversals. The same comments apply to the envelope of one standard deviation. These levels are only there to act as guides and not as signals to enter or exit. Since the VWAP is an indicator which resets each day, it can generally be considered more of a day trader's tool and should therefore be used in this way. It's a tool which will offer up mean reversion types of opportunity on an intraday basis and hence should be viewed in this way. So what if you are a longer-term trader or investor? What's the solution? The answer here is to move to the next in the series, which is the MVWAP. As you may have guessed, this stands for Moving Volume Weighted Average Price. A bit of a mouthful, but one which takes the VWAP and builds this into a moving average, which then runs seamlessly from one day to the next, and herein lies the difference. The VWAP provides a running total throughout the day, and so the final value of the day is the volume weighted average for the session. The MVWAP, on the other hand, is based on an average number of VWAP calculations, and depending on the number of periods set, and therefore can be customized accordingly, giving the opportunity for market noise to be smoothed out over longer periods, and therefore highlight longer-term trends for both trading and investing. The indicator can, of course, be configured to your own settings as required and works on all timeframes, but not the daily. With regard to using the indicator to enter both long and short positions, the same rules and suggestions apply as with the VWAP. The MVWAP acts as an alert, if you like, to potential opportunities developing, but only when confirmed above or below the indicator. And as before, pay close attention to the trend of the indicator, whether sloping upwards, downwards, or in congestion. You can think of the MVWAP as more of a trend-following indicator and the VWAP as a scalping intraday mean reversion indicator. The third version we've created for you is another extremely popular variant, and this one is called the AVWAP, which stands for Anchored Volume Weighted Average Price. As you might guess from the name, this gives the trader or investor a unique ability to anchor the VWAP wherever they choose. So no longer is the indicator tied to specific points on the chart. In other words, the starting point for the calculation is a meaningful price point selected by the trader or investor. But of course, the big question here is where? Where do we set our anchor? And with this version, we can apply it to any time frame, including the daily. This is no different to when we're out sailing and looking for a suitable anchorage for the day or the night, and take into account such factors as onshore or offshore wind, proximity of other vessels, type of sea bottom, etc. The first and perhaps most obvious points to consider are where we have a high volume event, which may also be linked to an explosion in volatility, with the potential for consolidation or a reversal if the volatility indicator is triggered. In short, where we see large price swings accompanied with high volume, and these can be triggered for a number of reasons, not least fundamental events, an earnings report, or a Fed statement. This is one group one can consider. Another is where we see clear signals of accumulation and distribution based on our volume price analysis methodology. Clearly, these would be considered as potential significant highs or significant lows, and therefore an excellent place to drop the anchor. A further group to consider might be those which are time-based, so for example, the start of a new month or a new week. Rather like technical analysis itself, the location of the anchor is an art, not a science, the only guiding principle being that it must be a significant level which stands out on the chart as a low or a high in whatever time frame is being considered. In short, any point which you consider on the chart to be an important one, whether it's fundamental news-based, price or volume-based, volatility-based or time-based, just drop the anchor on the point you consider and the AVWAP will do the rest. And remember, you can always adjust the position at any time. All the other points I've outlined earlier apply to this variant also, and when using multiple time frames, make sure to connect the anchor to the same point on the associated charts. Next in our journey of discovery comes the TWAP, which is the odd man out here, as this is the only variant which does not use volume, as it stands for time-weighted average price. The question then is, why have we included this amongst all the other volume-based versions? A good question. If we consider this question from the institutional side of the fence, it provides another mechanism by which very large parent block orders can be broken down into child orders and distributed across the time horizon based on the TWAP prices being calculated by the indicator. From our side of the fence as a trader or investor, what the TWAP does is to give more weighting to the most recent prices while still taking into account price changes in the past, and when combined with other indicators, is therefore an excellent tool for confirming changes in trend or trend continuation. As such, this is an indicator that we recommend using with others, such as the trend monitor and the trends indicator, to help you to stay in the trend once established. As you would expect, it works on all time frames, and all the same suggestions apply in terms of using the indicator as explained for the other variants. Finally, we come to the last version, which we've named the Interday VWAP, and one we felt was required to complete the full suite, as this is not available elsewhere. The reason it's called the Interday is because the indicator only works on the slower time frames, starting with the daily chart and down to the weekly and the monthly. So this is much more of an investor's tool and was developed with this specific idea in mind. While it works on the much slower time frames, the same suggestions and principles apply when considering buying or selling a stock, along with using multiple time frames as with the other variants. With the background details now covered, I hope you have an excellent understanding of this key indicator, why we develop them as a suite of tools, and how to apply and use them. They are all different and offer unique insights across the various time frames, whether as a trader or investor. So, without further ado, let's move on to look at the indicators in action in the next series of videos, where I've recorded one for each particular version.